Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing tonight? Hope you're doing good. Join me for a drink real quick. We're going to go over crude oil. And have you seen what's actually happening with crude oil? We're going to sample Bear Face here. Now, I've had this in the past with our Flaviar membership, but I did get a bottle because it's stuck in my head. It's a Canadian whiskey, and I remember liking it. So I thought, well, give it a shot, have a whole bottle there. Oh, flashbacks. All right. Very light. Yeah. No, yeah. Very light, kind of light on the sweetness too. Very, very good. It's Canadian, and I can't remember the story from when we looked it up before, but this week we'll be sampling some of the Canadian, Mississippi, and I believe New York bourbons that are on the list there. Or whiskeys that are on the list. So we'll see. Hey, for those of you not interested, grab a water, glass of wine, come hang out for a second, because we follow everything here at Jazz Wealth. We build our own funds, right? So we have a lot of mix of oil stocks and tech stocks, biotech, not so much, real estate and things like that. And we build our own funds instead of saying, we're going to buy a mutual fund and hope that you just enjoy the performance. Not our thing. So let's take a look at what we've got. If you've been following the crude oil markets, quite a decline here. Is it a time to buy? That's really the question. So a lot of our clients are going, hey, do we add more to that? Do we move more of an allocation to oil service stocks, transportation companies that are oil related, drilling companies, or just straight crude oil? Do we do that? And we say, well, let's take a look. So I'm going to share that with you guys here today. All right. This would be last week, actually. Oil fell about 8%. So we were kind of breaking through that sub 60 area, getting into the $50 range. You got to go back to just after the start of COVID to find that type of decline there. We're down 18.56% in April there in Saudi Arabia, and OPEC says, we don't care. We're going to drill more, baby. We're going to put more barrels per day out there. In fact, they just did that the other day. Now, the drop in crude oil ranks as one of the largest ever. So what we did first is said, well, let's just take a look, right? Looking over the course of a month, here's where we stand here for the month of April, down 18.56%. You've got COVID in there. You got financial crisis. In any data that you put together, if you're a study geeky market person like me, you're always going to find the dot-com crash, the financial crisis, and COVID as being some of the more extreme moves. So you might call them black swan events, but we have to factor them in. I mean, it's a part of life. So we've put all of the other large declines here. So you could see 18.56%. Right? Where does that rank relative to history going back to the 80s there? Well, it ranks as one of the worst that we could see, right? It falls in line with that. So now the question is, okay, all right, if the stock market has a really, really aggressive decline, historically, that turns out to be something you want to participate in. Remember the videos we did where we said if you miss the best days in the market, and then we went back and said, well, where do the best days come from? They come from the worst days, right? So they tend to be these rebound type moves. Is crude oil the same? If you've ever seen some of the shows that I've done in the past, crude oil is a lot like Forex, foreign exchange, currencies, US dollar, euro, things like that. You're familiar with that? Now, admittedly, I will raise my hand and say I am the worst foreign exchange investor on the planet. I won't even touch it. For whatever reason, I just don't do well with it. I don't do well with that, and I don't do well with biotech stocks. So you'll never notice that I'm focused in on biotech or foreign exchange, things like that. It's just not my wheelhouse. Everything else, thankfully, we're really good at here at Jazz Wealth, so we stick with that. But crude oil is one of those things where I say it trades like Forex, meaning when it trends, it trends. Don't fight the trend. Whenever the stock market has a 10% drop in a month, you want to go into that. You don't want to run away from that or like not participate, because historically the stock market is a counter trend type environment, meaning when it falls aggressively, people go, that's a good deal. I'll buy that. And it tends to snap back quickly. Do we not just see that, right? Through this last little tariff tantrum that we've had? Well, crude oil is a little bit different. So let's take a look here. If we say, the performance of this, right? All of these, let's look forward and go, how positive are we going to be in the future? Is okay, when this happens, A week later, there's a 47% chance that it's going to be higher. And I'm not making this up. A month later and 3 months later, you can do the data yourself. 47% chance that it's going to be higher. Now, remember, we're using these data points. We're not using all data points. We're saying, well, when this sort of nastiness happens, you got to really look out further to get that positivity back in your favor. And I would argue it's not even really that great. Oil tends to trend. It is a really, really difficult commodity to say, I'm going to bet on it changing course. It's very, very difficult, right? And this data shows that. So a year later, it shows, okay, well, we're trending back towards positive. It's fine. But in the short term, you don't want to be the person that guesses that oil is going to trade against its current direction. Really, really difficult. Now, if we look at forward performance actually going after those types of moves there, you notice that it's really difficult in the short term. It is really, really difficult to pick the change in direction from oil. Now, long term, it gets a little bit better. And generally speaking, yes, you're fine to invest in oil's discounts. I'm just not going to suggest that you're going to be right off the bat there. So extreme oil prices to the downside, they're not horribly normal. Like we're seeing one right now there, but in the short term, you got to be willing to accept a little bit of fluctuation there. As we get into the longer term, of course, it's a little bit better. There's an old saying in the day trading world, which you could apply to oil. It is called half the risk, twice the stop. Are you familiar with that? I used to teach the Chinese investors overseas years and years ago, and we would day trade. And there would be times where the market during when George Bush, the second George Bush, was the president during the financial crisis, he would come to the podium and he would talk, and we'd all go, short the market, short the market. It would go down. Inevitably, it would bounce, but we would talk about this. Well, it was so volatile at that point, the bandwidth of the internet couldn't keep up. So there'd be these gaps in prices. It was so fascinating. And I don't mean to get off topic here, but I'm getting to something. So what we would do is we would say, okay, we would normally take the risk of X. Let's say it's $100, right? We would normally risk $100 on this day trade. Instead, let's risk $50, but give it twice as much room to wiggle. And then at some point you could add the other $50, right? So it's half the risk, twice the stop. So on a investable level, like someone who's not interested in the day-to-day, right? If you're looking out 1 year, rather than being the person who goes all in on oil because it's down almost, well, especially now, down almost 20%, and now 20%, you would say, well, let me invest half the amount of money that I was going to, give it more room to wiggle, and then at some point, when that trend maybe changes a little bit, or you feel confident in that, add the other half. We don't need to get the best price with oil. This would be different than the stock market. So in the stock market, we see these 10, 20% drops, and you go, I'm in it for the long run. I just got a 20% discount. I don't care if I got the absolute best price, but chances are you're very, very close to the best price. Oil's different. And that's kind of the moral of the story. I wanted to bring this up because we get a lot of clients that go, I see the discount. My clients in particular are a bit of animals where I've convinced them that discounts are what we want. And so now when things fall, they're like, oh, do we buy this? United Healthcare the other day falls apart, right? It gets all the way down to like $415 or whatever it was. And I have clients left and right going, do I buy now? I'm like, okay, it's a big move. Let's look it up. Let's see what we can do instead of just blindly buying stuff. So careful with crude oil. If that's the only thing you take away from this, know that it is a trending commodity. Gold is sort of similar as well, but crude oil especially takes top rank there. So be careful when you see discounts in crude oil. And if you're not sure, you want some help there, jazzwealth.com. You can give us a call, schedule a call. We'd be happy to be your financial advisor. We're ranked the 36th best advisor in all of the United States. And we didn't pay for that. That was a ranking by USA Today. So we're happy to see that. And if we're not a good fit, we will point you in the right direction. We have no sales pitch. Just talk a little bit, see if we're a good fit. We'll be on our way. Hey, thanks for watching. Hope you learned something here today and gotten some good comments about the data-driven videos here. If you like this sort of thing, we'll keep it up. But otherwise, enjoy the rest of your evening. Adios.